Let's move on now to our guest joining us this morning. Kranthi Bathini, equity strategist at Wealthmills Securities, joins us this morning. Good morning, Kranthi. A good day to have you, where we are seeing some sort of a recovery in the markets. Yesterday, of course, was pretty much a bloodbath on the Lal Street, and in fact, not just on the Lal Street, in fact, across Asia. But this morning, things are looking a little better. How long will they continue to look better?
Uh, Kartik, good morning to you. As long as crude is in a comfortable zone, if we can see some kind of a consolidation in crude, and if the crude is sliding downwards, it can be positive for Indian markets by and large.
Okay.
If there is a spikes in the crude oil prices, that's definitely going to dent the economy and dent the earnings of the companies, and it's a big negative for the markets like India in a medium to short term perspective. So we need to be very much vigilant. We are witnessing some kind of a heightened activity in crude. Look at yesterday, the crude spiked around $120 per barrel. Today, thanks some kind of a comforting statements from the President Trump. Now we are at around $90 per barrel. If the crude continue to slide further, definitely it's going to be positive for markets like India.
Where do you see the crude story really settling down? Because there were estimates, pessimistic estimates yesterday, that crude could touch as high as maybe $150 a barrel if this happens to be a prolonged war. But now we are seeing a sharp recovery, also coming despite the fact that the G7 has not yet directly agreed to release the additional oil which they're holding as their strategic reserve. So one was expecting that that oil prices would be in for some sort of a shock this morning, but not really as yet. So how do you make the overall scenario playing out right now, with a mix of Russian oil allowed to enter India and the global dynamics of oil markets, the disruption in Strait of Hormuz, sort of a question mark still looming large on that? How do you see the oil story pan out from here?
Karthik, it's $1 million question, but if you put a gun on my head in a point blank range and ask me to tell, definitely on a longer term basis, crude is in a bear market. And look at the historical charts of crude in the past 15 years. In 2007, there is a prediction that crude is going to hit a range of $250 per barrel. And it was watched by many of the global broking houses and research houses. For the matter of fact, next 12 months, the crude touched a range of $20 to $30 per barrel. From there onwards, the crude is in a negative zone.
Mhm.
And when the Israel and Gaza and Iran tensions erupted 24 months back, okay, the crude was heading towards the similar range of $90 to $100 per barrel,
Mhm.
and the market prediction was in the same zone. And with the recent tensions in the Middle East, crude looked and the prediction is again back to $150 per barrel. But today we are back to again $90 per barrel. So we need to closely observe how the things are going to be, how these disruptions are going to create in terms of the supply chain is concerned. By and large, there is enough crude is available right now, and I have my clients who tend to visit Saudi Arabia for their business trips and taking the developments. The way this economy is shaping up in a different way, how these perennial orthodox countries shaping up their economy and changing their business models, mainly because they expect that the crude is going to be in a downtrend in the coming decades. That is the reason they want to diversify from the crude and oil incomes.
Okay.
So in a longer term perspective, the crude is in a downtrend. But these kind of and the EV adoption in the last few months has been very slow, and the adoption of fossil fuel is going very slow because of the low crude oil prices. If the crude oil prices are going to skyrocket, there is alternative energies are available on a longer term basis. So right now, this balanced view is there at this point of time. But any kind of these unexpected supply chain disruptions and supply disruptions are concerned, those are going to create short-term spikes. So if the Middle East issues get resolved within a couple of weeks' time, definitely crude can come back to again its original rate around $60 per barrel.
Sure.
But any kind of disruption in the Strait of Hormuz, definitely it's going to create some kind of a disruption in medium to short term. So one need to be closely vigilant, observing the things, and we need to acknowledge that in the last 10 years, India is the key beneficiary because of the global low crude oil prices.
All right, fair enough. Of course, so India has been a beneficiary, but a lot of ifs and buts and whethers or whether nots when it comes to assessing where the oil story is going from here. But Kranthi, I want to focus on oil marketing companies because the government has said that there is going to be no increase in the sticker price of petrol and diesel. But with elevated fuel prices, even though they've cooled down from yesterday's highs of 120 to about $87, $88 a barrel right now, the profit margins of oil marketing companies are likely to stay squeezed. So what should be the strategy for investors who are parked in the oil marketing company story?
Definitely, in the medium to short term, any elevated crude oil prices, they're going to have impact on the oil marketing companies, especially. But some kind of solace can come. The 20% blend of ethanol can give some kind of a comfort to them in the medium to short term. But definitely, any increase on the oil prices, and if the OMCs, oil marketing companies, are trying to absorb this increase of the crude oil price, definitely it's going to have impact on their earnings in the medium to short term. But everything is depends upon how the crude oil is going to pan out in the coming weeks and months.
All right. Also talk to us about, the fact that the government has said there's no shortage of ATF, but airlines are obviously, restricted in their flying routes, especially outside of India. We've seen the Indigo stock also get hammered over the last few days ever since the war in West Asia broke out. How do you see Indigo from here? I'm asking you for a stock-specific, for a change of stock-specific reaction this time.
Kartik, all these aviation companies, they work on a very thin margin. Any kind of spikes in the ATF fuels are concerned, it's going to have impact on the aviation companies in the medium to longer term perspective. And it is going to be a double whammy for Indigo. It's just recovering, and the increase in the oil prices, definitely it's going to have a impact on the margins. And also, it's going to create impact any kind of demand, and demand situation is arising because of the increase in the airfares. Definitely, it's going to have impact on the entire supply chain management of aviation industry. Specific to Indigo, in the medium to short term, any increase in the ATF prices, definitely it's going to take a toll on their margins in the medium to short term perspective.
Right. And one more stock-specific question this morning. Adani Ports, what do you make of that, given that, of course, Haifa, the main port which sort of connects Israel, the West Asian sort of entire geography to Europe? Obviously, in the line of conflict directly, how do you make of the Adani Port story? Is it a good time to perhaps, buy some Adani Port stocks, or on a day like today where the stock is up, perhaps, just sit on some profits?
One thing, the Adani Group shares are highly volatile, and they're the high beta stocks. So investors who have high risk appetite only, one can chip in into this group stocks. But Adani Ports, they have a strong infrastructure and one of the largest port operator in India, and their the Haifa port, it's going to have some kind of an impact because of the disruption in the supply chains in the region of Middle East is concerned. So if the investor have a high risk appetite, one can slowly add these kind of companies for a medium to longer term perspective.
All
Short
right.
term, there kind of some kind of a extra volatility for these stocks are concerned.
Fair enough. Kranthi Bathini, equity strategist, Wealthmills Security. Thank you so much for your input. We leave it at that this morning. But as always, pleasure having you here with us on
Always.
News 9.